Bandhan Mutual Fund presents MF Corner.
Hello and welcome. You are tuned into the special edition of Mutual Fund Corner YouTube edition to understand what's happening in the global economy, Indian economy, how it could impact investors, and what are some of the things that you should keep in your mind. Let's welcome our guest, Nirav Panchmatia, who is the founder and CEO at AUM Financial Distributors and AUM MF Services, joining in with his insights and expertise on what one should be watching out for when investing in the current scenario. Mr. Panchmatia, thank you so much for joining in today. And while we talk about so many things that's happening globally and in India, and we are talking to you at a time when there's so much uncertainty already. So would you say we are going through a temporary global slowdown and there's a deeper economic reset that an investor should be aware of?
Hi, Sonal. Thank you for having me. No, this is not, there is nothing temporary out there in the world. It's a very deep economic reset. Okay. A very big major shift is happening as far as the money matters are concerned world over. And our channel's viewers and investors should be very wary with their money going ahead. If you allow me, see, it was in 1944 that the Bretton Woods agreements was signed after World War II. And Bretton Woods Agreement decided that dollar would become the reserve currency of the world. Later on, during 1971, President Richard Nixon removed the gold standard. What it meant was that dollar and other fiat currencies around the world would not be backed by any gold. So they can start the printing machine. Third major event that happened a couple of years back, I think in around April 2024, President Joe Biden, when Russia attacked Ukraine, impounded the dollar reserves of Russia. Now, that started something very important. That started the de-dollarization around the world and the debasement trade. Let me quickly explain what is de-dollarization. The perception of dollar has gone down. Central bankers around the world, especially in Asia, of countries like India, China, Russia, and the Middle East, are no more trusting the US dollar for their reserves. So people are moving away from the fiat currencies. And debasement trade means that people are moving away from fiat currencies, the currencies that are printed by central bankers around the world, to precious metals like gold and silver, which was considered money all along through centuries. So these two are a very major tectonic shift in the world around us. That is going to affect the investments and money at a very core level. See, people confuse fiat currencies with money. That's not money. One of the important elements for a for money is that it should be a store of value. Now, since President Trump became the president in his second tenure, the DXY, the dollar index, is depreciated by 10 to 11% against major currencies around the world. Now, if your money is going to depreciate at 10% in a very short period of time, the foreign bankers, the central bankers are not going to trust the fiat currency. So a big tectonic shift is happening from fiat currencies to precious metals.
Okay, all right. And that we can see in the way precious metals are rallying as well, right?
Yeah.
Silver, other aspects of that particular segment as well. In that case, what do you have to say about some of the global risks that investors should be worried about the most? Is it inflation? Is it interest rates? Is it debt or geopolitics? Or all of them combined together should be kept in mind when you talk about investments?
Sonal, the answer is all of the above. Okay, I mean, we might see a financial crisis that the world has never seen before. This crisis can be so huge that 2008 subprime crisis can look like a movie trailer. See, it's not an equity market which is in trouble. It is not a particular commodity market which is in trouble. It is money which is being played with. Okay, so debasement trade, as I said earlier, that if people do not trust the reserve currency of the world and there is no other alternate fiat currency to take its place, that is last time, earlier there used to be the previous reserve currency was the pound. People didn't stop trusting pound and move to US dollar. So there was an alternative available. Today, there's no other alternative in the world of money. Hence, money is moving from fiat currencies to precious metal like gold and silver. Gold and silver, like the days of the euro, is again becoming a currency. Now, this can affect any investment that we hold. So it is a very major tectonic move for which we have to be aware and prepare ourselves.
Take that point. So in that case, are central banks still in control, or are we basically underestimating policy risks already? What do you make of the recent changes or recent announcements that we've seen from global central banks?
So, Sunil, to answer your question, I'll divide the central banks around the world into two. The central bankers of countries like India, China, Russia, and some countries in the Middle East, I'll put them in one corner. And in the second corner, I'll put central bankers like the US Fed and the Western economy. I believe the Asian central banks, the central bankers of China, India, Russia are very well aware of this risk. And as a result, if you see, the data shows that approximately 1,200 tons of gold has been bought by the central banks since the Russian invasion of Ukraine. So they are already preparing for what is going to come. Now, US Fed is in a big trouble. See, America has $38 trillion of debt. The American economy's GDP is $30 trillion. So the debt to GDP is approximately 120 to 124%, which is the highest ever in the history of the US economy. Also, they have to pay $1.25 trillion of interest to service that debt, which is only increasing by the day. Now, that is more than the defense and the healthcare budget of the country. So, US Fed is in a mix. It's not an easy decision whether to control inflation or to, if they increase interest rate, they are in trouble. If they do not increase interest rate, they are in trouble. So I'll say the Western central banks are not that much in control, and they are in a very big trouble. The Asian central banks are taking control and they're moving into precious metals.
Got it.
Does that answer the question?
Yes, yes, it does. It also makes the viewers understand how it is differentiating in how the idea is differentiating or the execution is differentiating for different central banks across the world. But when we talk about global reset, what does it mean for an individual investor versus a policymaker? I would like to focus more on an individual investor because that's our core audience.
Sure. So then here is the thing. See, there are years which are risk on years. So after COVID, if you piled up on Indian equity, you made huge amount of money. Now there are years which are risk off year. So risk off year is a year where you do not take risk or you reduce your risk drastically. So in India, I would say 2025, followed by 2026 and probably 2027 are risk off years. If you preserve capital, if you preserve your investment value, even if you make 0% return, I think you'll be top of the class, as we have seen from the equity returns of the last year. So this is a risk of year. If you are driving on an highway, you feel cramps in your legs, it is better to take a break, have tea and coffee, and then again resume your journey. It's okay to go late. It's okay to get less return. So equity and real estate are risky assets and gold and silver are safe havens. So it is better to move from a risk on asset class to a risk off asset class. That would be my advice to the Indian investor.
So in that case, when we talk about globalization, and we've been talking about a lot of FPI flows, which have been slowing down in Indian markets right now, is globalization being replaced by fragmentation? And how does that change the investment flows that we are seeing from FPIs or FIIs?
You're bang on, Sunil. We are in a defragmented world. We are in a fragmented world. Globalization is dead. See, since the current president took over in United States and since that tariff thing happened, now it is a world which says to each his own. Every country should be taking care of themselves. We've had a wonderful honeymoon period right from Second World War till the 2024, where every country was ranked based on merit and the trade happened based on merit. That is past now. So it's a very fragmented world. Every country, every economy has to take care of themselves. Otherwise, there'll be a huge financial ruin. So globalization, according to me, is dead.
Oh.
And countries are trading. It's a bipolar world rather than a multipolar world.
Okay, all right. So that's a big shift that we are seeing right now. But it was a very insightful conversation. Thank you so much, Mr. Panchmatia, for joining in, being very comprehensive in the answers, which basically talk about the bigger picture that an investor should be watching out for as well. Because as you said, it's not bilateral anymore. We are talking more about an Indian perspective when it comes to investments as well. So thank you so much for your time today.
And if I can add, Sunil, The world is moving, and there was one part of your answer that I didn't answer. The investment flows. So the investment flows will move from west to east. It will move from fiat currencies like dollar and euro to precious metal like gold and silver. Okay, and it will be moving from risky assets like equity and property to safe haven assets like precious metals. So that is where the world is moving. Thank you for having me.
Okay, all right. Thank you so much. Speak to you very soon again.
Yeah, sure.
Okay, all right. On that note, we'll take your leave on this edition of Mutual Fund Corner, but stay tuned for more news and updates that will follow now.
Bandhan Mutual Fund presents MF Corner.